DXY, on USD, and on NASDAQ. And of course, invest me on NASDAQ, alright? And you will be right. So without further ado, let's just go right to this video, and not even video, but pretty much just call. Usually, record this to YouTube this time as well. And let's just go through it. So yeah, start this shit. So let's just go to the calendar first. So starting off, right, I just wanted to quickly say that we're approaching August, and the seasonal tendency for August is that we usually see a consolidation. Pretty basic stuff. You already should know that August is a date or a month where pretty much we have bad price action, and that pretty much means for me, all right, personally, right, you can trade it, right, but personally I just lower the risk during that month and I lower the trade frequency, meaning I take fewer amounts of trades, I focus on the good setups, and I lower the risk on all of the setups I'm taking. Meaning if I'm currently now, or last week I traded with 0.5% risk, I will take during the duration of August 0.25% risk on each trade. Alright, and after August I will go back to my normal risk. Alright, now it's a seasonal tendency, meaning we can start the consolidation this week, or we can overall start the bad price action next week. Alright, and pretty much how do I know it's going to be a consolidation this year as well? Because as y'all know, the market does not always need to follow the seasonal tendencies. However, I got it confirmed by the externals, because the externals, as the students know, are not aligned, and that pretty much means that we most likely, from a probabilistical statistical standpoint, see a consolidation. Alright, that's some sauce I wanted to share for y'all. Meaning, now we're talking about higher time frames. Now we're not talking about intradays. Alright, so still intradays and scalping will be possible. Alright, just lower your trade frequency, lower your risk. That's my recommendation for everyone. Alright, so please don't take my word for it. Everything I say is from my interpretation, alright, of the markets. So please just follow your own. Alright, if you're profitable, don't even listen to me. You don't really, of course, it would be nice if you were here, because it's still goated to have talk to everyone person to person. But for Monday, pretty much this Monday I will definitely not trade. Why I say that is pretty much if you look back on the previous Friday, like this Friday, they had some serious issues with on the electronic side of things. Alright, I don't know which specific company it was. Maybe you guys could say it in the chat. Now Microsoft, I think it's I don't know, it was some update. CrowdStrike, exactly, CrowdStrike. So they're pretty much yeah, I've forgotten the name, but pretty much what they do, yeah, cybersecurity company. Alright, they were to update their systems, but their systems had some bug, meaning pretty much all the banking sector, communication sector, and such things pretty much shut down. Alright, and to this day, right, we still have some problems. Alright, I was traveling yesterday. I was to travel home, right, and pretty much I needed to stay at the airport for 12 hours just because there was so much delay. Alright, and pretty much it got me thinking that we will have some still problems on Monday, meaning we won't, the small money, the commercials, the real institutions, they won't have any counterparty liquidity, and they won't pretty much, they will stay out of the markets, right? Meaning that we'll see pretty much a consolidation on Monday, most definitely. All right, most definitely. Why will they stay out? pretty much just because they're still going to have some issues. All right, you can see pretty much it says the banking, pretty much the banking sector of things have experienced an amount of issues. All right, what is this also like? I wanted to go pretty much on the sidelines now, but what is this also good for? All right, it's good for crypto. It's real good for crypto because a lot of people could not overall, all right, or it more or less solidifies the importance of crypto. If you're a crypto enthusiast or something like that, all right, this should just um, spark, some fires, all right, and it did in the world, all right. So people, right, every uncertainty in a form of electronic issues, all right, will be beneficial for crypto longer term because it solidifies the crypto space overall objective, right? So what it does is pretty much solidifies that crypto is a safe to use payment system. All right, you don't need to see the screen right now. All right, I'm not showing any charts. All right, oh, it keeps loading. I don't know. Yeah, I don't know. Maybe just restart your computer or something. I don't know, but let's just go on. So I will not trade Monday, and I highly think, all right, I think there's a high amount of probability that Monday will actually be a consolidation. Now Tuesday, I think will be a manipulation, just because we have so much news on Wednesday. All right, so I think on Tuesday, we might continue the consolidation from Monday if we still have any issues. But if those issues are fully resolved, how will you know they're fully resolved? I guess it's just up to you to do your own research to decide if it's safe to trade on Tuesday. However, on Tuesday, I think it's going to be safe to trade. And I can send an announcement if y'all want. But pretty much, yeah, CrowdStrike issues. Maybe it is. On Tuesday, I think we'll see a manipulation, right? And on Wednesday, we'll see the distribution, right? It's pretty simple. So on Wednesday, right, going into Wednesday, we have some PMI manufacturing news, all right? And we also have some Canadian news, and we also have some PMI for the US dollar. And I think it's fairly safe to trade on Wednesday. You guys can do it, all right? We'll pretty much know in which direction the news will be heading. Because it will be opposite towards what Tuesday, like what the Tuesday manipulation is, right? So it will be fairly easy, I would say, to determine where it will go. All right. Now on Thursday, all right, going to Thursday, pretty much you have what I would say a continuation of Wednesday. And on Friday, I think we'll see some measure of TGIF to the 80% mark of the weekly extension. All right, so it should be a fairly nice open, high, low, and close week. All right, meaning quarterly theory, etc., will overall work totally amazing this week. All right, if you're trading quarterly theory, I guess a lot of people are doing it. I'm not doing it. However, this week will be an other week for quarterly theory, and it will work super good. Anyways, guys, let's just go over to pretty much the DXY now. Yeah, it's just open, high, low, and close, right? It's pretty much just power threes. Yes, ICT has 80 plus entry models. So anyways, going over to the DXY, right? You already should have some things annotated, but going over to the monthly charts. All right, and what I quickly wanted to touch upon is that we still are overall bearish longer term, meaning the upside I'm potentially seeking, all right, does not really need to happen. All right, you guys should pretty much understand that by this point right now. So you should pretty much understand that we are bearish longer term on the DXY for a while until, all right, the third or fourth interest rates, lowering, right? So when they have lowered the interest rates 3 or 4 times, you will be seeing some measurement of upside, potentially a month being bullish or something like that. But that's long while from now. I am, however, seeing the DXY interest rates, or the US interest rate, not the DXY. I'm sorry, guys, for that misinterpretation, but I am wanting to see a lower interest rates within 2 months now. So I want the interest rates to go lower now, for pretty much, or in 2 months or something like that, right? With the next special FOMC meeting, all right? However, prior to that, I don't know why. Oh man, I'll delete this. But anyways, prior to that, I think I have some other level in here. Yeah, here. Yeah, but prior to that, yeah, look at how it pretty much cut the top. Anyways, prior to that, what I want to see is potential upside on the DXY after the consolidation on August. If you go and look at the seasonalities for the DXY, which I highly recommend everyone to look at, you will see that after August we tend to see a higher DXY for 3 consecutive months, right? So after August, all right, we will potentially see a higher DXY, potentially finishing this market maker buy model and potentially taking out this buy side liquidity and going to this rejection block right there. All right, and after that we will be seeing lower. All right, but for now, right, what I am thinking on the intermediate time frames is pretty much on the weekly, right? I think we will be seeing another weekly bullish close for the DXY. All right, if we see a manipulation on Tuesday being lower, meaning if you see Tuesday going lower, all right, you can potentially see Wednesday going higher, all right, and when you see Wednesday's news going higher, you will potentially know where Thursday is going to draw to, right? And if Thursday is bullish, right, we will potentially go through this, inversing this, all right, and potentially reach up higher into this premium fair value gap, which is also an reprice rebalance on the daily time frame. And a lot of people don't even know what a reprice rebalance is, because it's a forgotten ICT concept, right? No one actually watched ICT. So this is pretty much your homework for the next week, right? Should pretty much look up what the reprice rebalance actually is. All right, I've seen no TT Trades video on this, at least, so that's good. You have to do your own ICT little research right there, actually going through what an reprice rebalance is. So pretty much potentially on Monday we will be seeing a consolidation, at least from my standpoint, right? So intraday we will overall, what I'm seeing is a consolidation. Tuesday, what I most likely think we will do, all right, is that I think we will most likely manipulate lower, taking out Monday's low, meaning taking out previous daily low, all right? After that, all right, Tuesday is lower, so what do you expect on Wednesday? Higher prices, not because of quarterly theory, but because it's just a normal open, high, low and close week, or a bullish buy program which the IPDA runs. All right, it's a IPDA program. I will not touch upon what an IPDA program is. That's also up to you to decide what it is. All right, after that, all right, what I am thinking is that I'm thinking we will potentially reach up higher into this on this week, all right? And after that, pretty much I'm thinking we will start the consolidation and the consolidation would take us down into this inverse value gap, and we would just consolidate between these two measurement zones, right, or PD arrays. And then after that, after August, you will tend to see an higher DXY according to the seasonalities, that taking us up, taking the buy side liquidity and the rejection block. I sent out an analysis view on TikTok, and my analysis was pretty much that we would reach down lower, take this future projection 20 and 40 IPDA look-back periods, take the relative lows, go into the consequent encroachment, and go higher. All right. Then after this, in here you would look for a good buying opportunity on USD or potential asset which goes against the DXY. All right. And after that, you will be seeing overall us going low for the DXY. And here, overall, once we have reached this price point, seeing as the consolidation of August starts, after the August consolidation, we can consolidate for like 3 weeks. What I would say is pretty much us going higher according to seasonalities for the DXY. Now after that, we will go lower. So pretty much something like this. And that's pretty much my analysis, right? I sent out to the students as well. So you got some sauce right there. What you can do, all right? What you can do is, of course, grade the swing. So if you now potentially, all right, this is, of course, something which ICTs talks about. But someone asked me, like, oh, can you talk about gradient swings? Of course I can talk about gradient swings. It's fairly very simple, all right? Everything can be divided up into quadrants, even swings, all right? So if you now know a potential which we anticipated the consequent encroachment of this weekly fair value gap to be the low of the week, which we predicted, right? Like, there is no denying, all right? Go and watch the analysis on TikTok, right? I sent out, and of course the students know because we had a call about this, right? You can just divide it into quadrants, all right? And what you potentially see now is that we will overall, or the quadrants, right, is overall aligning with PD arrays. That's the first thing which overall tells you that you're correct in your graded swing, in your graded price swing. Second thing which tells you is right is, of course, if you see those things playing out. So of course, if we go higher, reject after, go up over this, right? Go into maybe the consequent encroachment or maybe the 25% mark, go lower from there. All right. So think of it. Maybe we consolidate upwards tomorrow. All right, around this point. Maybe we more or less have an open manipulation on Tuesday up here, and then maybe we'll just close downwards into this order block on the weekly time frame. All right, on Tuesday now. And now if Tuesday closed lower, what do you expect? And this is pretty much us respecting the 25% mark or 75% mark of this graded price swing. If price respects the graded price swing, you will know it's correct. All right. And if you see overall maybe a market making model or a consolidation forming during the 0.5% mark, all right, and you see pretty much us retracing, doing a low risk buy here when we reach the 0.25 or 0.75% mark, then you know you're right. All right. Yeah, but I had to shed some light on that. All right. They will not understand, because for you guys to understand to, you know, and great extent, all right, you will overall need a lot more than that. All right. However, that maybe can give you some thoughts. All right. So pretty much all of this, all right, you guys now should understand, right? So now let's just go to Euro USD pretty quickly. All right, now you know what we're anticipating. All right, bam, loaded up Euro USD. All right. Oh my gosh, do you think we're bearish on the DXY because of Biden? Oh my gosh. Oh my gosh, guys. All right, that won't have any effect on the markets. All right, the Biden won't have any effect on the markets. All right, it's politics, it's not economics. All right, anyways, let's go to this. Yeah, exactly. That's bullish for the DXY. That's super bullish, by the way. The IT outage. and bullish for crypto as well. But yeah, anyways, guys, so pretty much right here we have USD, and what I sent out last week was pretty much us trading up higher, taking this buy side, going to this rejection block. I'll not tell you why specifically this rejection block. That the students already know, because the students pretty much, we have anticipated this for weeks now. All right, that's all I'm telling you all. All right, and now we're just watching this discount weekly for value gap because we're watching the premium for value gap. However, you need to be pretty much a little bit careful of this little fair value gap being right here as well. All right, strategically placed. Strategically placed, maybe if you're bearish or have a bearish analysis, to become an inverse fair value gap. All right, ICT traders would never buy in this fair value gap because it's in a premium. All right, we're not stupid. Anyways, so let's just drop down to the daily time frame. As y'all saw, pretty much we traded up to that, and then we pretty much traded lower. You know, it's fairly easy. On Monday, pretty much what I think is what that will consolidate downwards, all right, into that inverse fair value gap, or what I think will become an inverse fair value gap, maybe, all right. And then on Tuesday, all right, I think we'll manipulate upwards, taking Monday high, Wednesday lower, Thursday continuation, Friday TGIF to the 80% mark of the weekly extension. All right, should be fairly easy to understand. All right. However, I had two scenarios. I will just tell you one. All right. I told you both on the DXY. It's pretty much your homework to figure out yourself on the DXY. Yeah, like a lot of people are talking about new week opening gaps. I don't really think we will have a new week opening gap for this week. We might have, all right? We might have, all right? There is a slight possibility. But for this week, right, I would say, yeah, like maybe, all right? Maybe. But we already had the news on Friday, I would say. Like we already had an IT IT outage on Friday. Meaning, I think we won't have the uncertainty of the new week opening gap. But you know, it's fairly easy. If we create a new week opening gap, that does not change anything. All right. Like it won't change anything, the new week opening gap, if we have one. I don't think we will have one because I don't think it will have, like, maybe let's see. But if we have one, it's going to be bullish for the DXY, and it's going to be overall a bearish new week opening gap for EUR/USD, right? It's fairly easy to understand. Why? Because if you have a crisis, it's going to always be bullish for the DXY because the DXY goes up because it's a safe haven asset, while everything goes down against it. Fairly easy to understand. All right, so pretty much now I've talked about what I anticipate for EUR/USD. Just go and watch ICT if you want to know what a new week opening gap is. He has specifically a video for you. So I want to see price overall trade down into this, then price trade up into an OT of this range getting created in here, and you can overall grade this price swing from here to here. I'm not talking about it anymore. However, you can just place an OT from here to here. Then you'll see price into the OT, and then you'll see price consolidate, and then you'll see price going lower, and then you'll see price going higher. Oh wow. Anyways, let's just go to NASDAQ. So on NASDAQ, right, what I want to show everyone right here, all right, I've been actually doing some analysis on NASDAQ. However, I'm not good at NASDAQ. So if you don't want any good analysis, you can pretty much stop this talk right now because I suck at NASDAQ, all right? So pretty much what I anticipate on NASDAQ is us overall going lower, taking out this time-based equity in the form of IPDA look-back periods, reaching for this relative close in form of engineered liquidity here, relative close, but also overall here, and relative close for this weekly close, taking previous weekly high after a Monday being overall a consolidation, reaching down lower on Tuesday, and then pretty much what I want to see is us continue lower into maybe the consolidation encroachments, and after that we will overall see where price will go. But for that now, right, you will know that overall what I anticipate is overall NASDAQ to go lower for half of this week and then upwards for the rest of this week. That's what I'm telling you all. All right, so I want to see price going into this and then going high from there, because what I've learned is that you always should stay bullish on NASDAQ. So what I maybe would do is take a trade once we, or maybe like, try to wait for a model once we have reached the mean threshold of, or not mean threshold, that's order block, well, cost encroachment of this weekly fair value gap. And after taking these relative lows, so we have sell side liquidity getting taken out in the form of IPD liquid periods, which is, golden. Then we have this, and then we have upwards momentum. All right, I'm not good at NASDAQ. All right, so what I want to tell y'all as well. All right, what I want to tell y'all as well. All right, and this is also potentially going forward and monthly for back up as well. But what I wanted to tell y'all, all right, is that the SnP500 and NASDAQ usually, all right, if you have a setting precedent, all right, this is market cycles, all right. I think this is not something I've learned to follow ICT. This is something pretty much I've statistically checked out, but it's also, I've read it the first time I've read it in, I think the book is even called Market Cycles. It's literally about seasonal tendencies and market cycles. But pretty much what we usually see, all right. So I don't take all the information about from ICT, right? I've read a lot of books as well, retail books and such. Yeah. I'm the retail trader here. Anyways, so what we usually see, all right, is 3 months prior, all right. If you want to see, all right, because this is like, I think it's 70% accurate or something. I can check my data later, but I think it's like 72% accurate or something. But if you have a president, right, and that president won't get re-elected, you will see SnP500 go lower for 3 consecutive months before the presidency. And then, because the market always prices it in, right? Because then, all right, if we see lower now, like if we see this maybe becoming an inverse value gap and we see low prices for NASDAQ, you will overall know that the sitting like party in the presidency, like Democrats, won't get re-elected. So that's like a leading indicator you can look for markets. You can look at markets doing anything, pricing everything in and be, statistically right in the real world as well. So, it has some real world implications as well, right? Pretty interesting, right? So, but I think we won't see NASDAQ going lower yet. However, I think we will see NASDAQ and SnP500 going lower later, like in 2 months or something. All right, in 2 months or something. When we just have 3 months left, I think we will go lower. Meaning, I think the Democrats will lose this time against the Republicans. But I'm not a politician and I'm not into politics so much. But that's pretty much my thoughts going into it, right? I want to stay pretty neutral when it comes to such things. Yeah, but of course, who does not love Trump? Anyways, guys, yeah, I think that's it for today. Pretty interesting call, right? You already know what I'm anticipating now for USD and what I'm anticipating for the DXY. And now for the DXY, you can translate that to any given asset class you're trading, that being gold, or that being pretty much USD JPY, but also NASDAQ. And NASDAQ I'm not good at, so pretty much stay cautious and stay safe, like ICT usually says. Bye, guys.